The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick. These are your headlines. Iran and the US exchange strikes for a third night as President Trump declares America the guardian of the Strait of Hormuz, announcing a 20% levy on all cargo. Despite that, the president seems bullish on the prospect of the two sides coming to an understanding.
We're knocking out all of their offensive capability, and we're controlling the straits. We're putting the blockade back, and it's a blockade not for anybody but Iran.
So you think a deal is still possible? You think they'll return to that?
Yeah, I think a deal is possible, sure, I do.
Brent sees its biggest one-day surge since COVID as bets of a return to the status quo in the Strait of Hormuz falter.
Plus, the UK and Switzerland signing a trade deal on services as Rachel Reeves prepares her final Mansion House speech before Andy Burnham is appointed Prime Minister. Trade Minister Chris Bryant tells CNBC what we might expect from a Burnham government.
Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. But what do I think will happen in 5, 10, 15 years' time? I think our historic destiny is to be back in the European Union.
The US and Iran have exchanged further fire after President Donald Trump said Washington would resume its naval blockade of Iranian ports and announced a 20% toll on cargo through the critical waterway, something regulators and his own administration officials have previously said is illegal under international law. Iran has fired at neighbouring Gulf states with 2 Emirati tankers hit in Omani waters. So we're looking at here, it feels as though we've got the Americans declaring they are top cop, that they are in charge of the waterways, so effectively trying to nullify what the Iranians are achieving here. Whether this works, it's obviously upping the ante, but this is what we've seen from Donald Trump all along, trying to play the Iranians at their same game. So far it hasn't worked. Let's see whether this is the latest twist and turn, whether it's any
With
successful.
respect to the US administration, it is a terrible idea on so many fronts. Who advised the president to call himself the guardian of the waterway or whatever it is? Who advised the president to say we're going to charge 20%? There are so many geopolitical reasons why this is a bad idea. 2 of those geopolitical reasons. 1, the Strait of Malacca. 2, the Strait of Taiwan. You don't have to explain or understand geography or geopolitics too deeply to a 10-year-old child to make them understand that if you think that you can put 20% tariffs on one waterway, that other actors in other parts of the world and very sensitive parts of the world might think, well, if the US, the guardian of whatever, are going to do this, then we can do it as well. It is a terrible idea on every front. And by the way, stunningly unenforceable as well. What, the UAE is suddenly going to turn around and say, do you know what we'll do? We'll put $16 on a barrel of oil for you, sir. Or the Saudis are going to say, yeah, we're going to do that as well when they're in a cat fight to sell their product globally. Who in the US administration told the president this is a good idea?
Well, we're opening the door to a whole heap of foreign policy discussions because, go back to Venezuela, where there was, again, a test of international law sweeping into a country under the cover of darkness and replacing a leader in a regime. So this goes to the heart of the foreign policy. What we used to talk about when it came to the US was the sort of leadership, what the US did, where it held itself to very high levels, held itself to account, was really the way it conducted itself to send a message to the international community. We've seen a very different approach under this administration. And again, when it comes to the waterway, it's about being in the scrum, fight you in a very strong street fight. That's what we're seeing. It's a street fight.
Dan Murphy, do you know any GCC country that's going to pay a toll of 20% to the United States for safe passage?
No, and I'm sure the GCC countries are now trying to work out exactly what this new toll or tariff is ultimately going to mean for them. The other question to ask this morning is just how credible is this threat? Will the president actually hold on to this idea, or is this just another piece of flash in the pan foreign policy? Either way, it seems as if oil markets are reacting. We saw oil just posting its biggest surge in years as the Strait of Hormuz effectively became the new front line in this conflict. Brent crude surging nearly 10% overnight. That was its biggest one-day gain since 2020, some 6 years ago. US crude also jumping more than 9% to around $78 a barrel, erasing what has been a month of losses in a single session. President Trump saying the US, which he has called the new guardian of the Strait, will impose this 20% fee on cargo transiting Hormuz, and also saying America should be paid for this because it's protecting a very rich portion of the world, he says. Listen to this.
We're putting the blockade back, and it's a blockade not for anybody but Iran. In other words, anybody doing business with Iran can't go through. Everyone else will be able to go through. So it's a blockade. It's a very strong blockade. The blockade was probably more effective even than hitting them, but I think the combination is the thing that really does it.
President Trump speaking there, and there's an obvious contradiction as well, because when Iran previously floated a similar toll, Trump's own Secretary of State and UN ambassador called it a violation of international law. And we've already seen the Iranians firing back on this. The foreign minister on X saying Iran has always been the guardian of the Strait and will remain so forever. So this really sets the US and Iran up on another collision course here, one that will ultimately directly impact markets as well. And a Wall Street Journal editorial today also says this US blockade is costing Iran about $435 million a day in lost economic activity. The White House clearly betting here that this attempt on economic pressure will succeed where diplomacy has not. It's back over to you.
Dan, I just wanted to bring up some figures here. Swiss Quote sent an email this morning talking about the cost here, saying that effectively when the Iranians were talking about $2 million per ship, but this far exceeds that, saying on an average $150 to $170 million load that a fully loaded tanker is. 20% fee would be $30 to $34 million per cargo. So well and truly above the $2 million. When you talk about the economics of that for shipping oil through the Strait of Hormuz, this seems to very much drive up the price of oil, if it were enforceable.
Certainly, if it were enforced, it would put a premium on every barrel, as Steve was explaining. And there have been some numbers floated around. $15 a barrel is the current consensus, at least according to some of the analysts that we've been speaking to. And whether or not that cost would actually be passed on, I think, is a big question as well. The other thing to add is that the waterway itself is still effectively under blockade here and very dangerous. In the last 24 hours as well, we've also seen the UAE coming under direct attack. The UAE saying 2 of its oil tankers were struck by Iranian cruise missiles in the Strait. 1 Indian crew member was tragically killed. 8 others were wounded. Abu Dhabi calling this a blatant attack and saying it now reserves the right to respond as well. So clearly the situation on the waterway is still very, very volatile, and the economics of what happens next also now very closely watched by all market participants and anyone attempting to trade oil right now.
All right, Dan, great coverage as ever. Thank you very much indeed for that. And on a programming note, our US colleagues will be speaking exclusively to the US Energy Secretary, that is Chris Bryant. You can catch that conversation at 9:30 London time.
It was a retreat for markets yesterday stateside. If we take a look at how Wall Street finished, you can see down on the Dow about 0.25%, stepped up selling on the S&P 500 and across to the Nasdaq down 1.5%. So investors clearly rattled by what they're seeing out of the events from the Middle East to the higher oil price, but at the same time where we've got a more hawkish commentary from the central bank. So two negatives here and the market turning tail as a result. The sector's energy was up, reflecting that oil price up about 3%, so much stronger day, but tech was the laggard. And some of those tech fears, though, really emanating from the Asian markets, where we've seen SK Hynix, Samsung yesterday under deep pressure. We saw double-digit declines there, despite a very strong showing for both of those stocks over the past week, from Samsung earnings across to SK Hynix's listing on the ADRs in the States. But now as we move into the trading session today, you can see we've settled down in some of these ranges. There has been a view that some of the leverage needs to flush out of the system, which is why you've had such a wild ride on both the Japanese and the Kospi in particular. So this morning we're seeing a little bit of green return to those charts, but on the back of what has been an incredibly bearish trade. We're up 60-odd% so far for the year on the Kospi, but down about 25% off that record high. So that's bear market territory. European futures, the early picture today on the back of what was a flat session as we wrapped up yesterday on the Stock 600. We're chasing some upside on 50, a downside on 50 futures, 40 upside, slightly inclined into the green on that FTSE, but it is a weaker picture for the DAX, 4/10 down. It was high yesterday by 0.2%. So again, it is a bit of a mixed picture that we're seeing here in the European trade of late. To US futures, and on the back of the declines we saw yesterday, this is how we're setting up for the trade stateside. We are chasing just patches of upside, very slim ranges at this hour on the Nasdaq in the tech sector and flat on the Dow. And let's get some thoughts on the market with Wolf von Rockberg, who is the equity strategist at Safra Saracen Sustainable Asset Management. Wolf, thank you very much for joining us. Let me just get to some of those headwinds that are now materialised for markets, namely circling back to heightened tensions around the Middle East, but combined with what seems to be a central bank stateside that is more forceful in its language tackling inflation.
Thanks a lot. Good morning here from my side. I think, kind of the flare up in the tensions around the Strait of Hormuz is just a bit of a cherry on the top of the cake here. It hasn't really changed the trajectory for the Fed, in my view. What's really important for the Fed, or where really kind of the fundamental driver is or lies, is the core inflation picture, which is really kind of troughed at the beginning of the year in the first quarter, and has since been going higher. And we would also expect this to continue throughout the second half of the year. The inflationary pressure, regardless of what the oil price is doing and what's happening in the Strait of Hormuz, will likely remain high. And I think that's what the FOMC members are seeing. That's what Waller is seeing. That's the reason he's basically put July on the table yesterday. We're getting the numbers today. Let's see where they will come out. But in general, I think this upward pressure will remain in place. And as such, we're kind of seeing a different market backdrop for equities, with real rates going higher, Fed repricing, and this pressure won't go away in the very near term, I think.
Yes, indeed. Right to highlight the CPI coming out later today, and we've got some comments too from Kevin Walsh. But I want to get to the oil price and the ramifications, because the market had priced out some of the more extreme situations around the Middle East as we got the ceasefire agreement. How do we think about the market managing risk around the Middle East from here?
I think at current levels, it's not a let's say general risk for the market. If oil prices were to go, let's say, back above $100, the wider equity market would pay more attention. And obviously, if it were to go to 120, 130, it would start probably impacting the US consumer. The risk of oil prices, kind of spiking higher at some point in the near-term future, if the strait remains closed, I think is rising, just because inventory levels are quite a bit lower than where they were at the beginning of March, when obviously the first closure happened. And as such, I think, there's a bit of a tail risk, quite clearly, that we will, go down that route. But at the same time, and as we know, there is a reaction function on Trump's end. So I wouldn't think that he will, eventually charge the fee he has announced yesterday. He's definitely sensitive to the level of the oil price. And as they go higher, I think we will also see some kind of moderating messaging from his end. So it's not a given that oil prices will go to those levels. And for the time being, at least, I would rather focus on core inflation, rather focus on the semi side, rather focus on earnings and that kind of stuff. I think that's more important for the trajectory for equities into the end of the year, or over the next half year.
I think absolutely fascinating what you've said to Karen there as well. But there's something you piqued my interest in your notes, and it said margin peak for the cycle. So despite the fact that we're going to get some absolutely fantastic numbers out of the earnings season stateside, does that peak margin story mean that actually this is as good as it gets in terms of profitability and indeed equity gains?
Yeah, I could very, very well imagine that this is the case. I think we've had some very strong drivers helping margins to go up over the past couple of quarters. Obviously, we are kind of, at record margins for the S&P 500. What's added to this in the second quarter is the rise in the oil price. So say the quarter is basically closed pretty much at the peak of oil prices. So energy will deliver, quite substantially. The sector will deliver around 3 to 4% of the earnings growth to the S&P 500 aggregate, and the sector only is 3% of in terms of market cap of the index. So it's quite a substantial addition here from a pretty small part of the market. And obviously, all of this is margin addition because it's coming from higher oil prices, which is basically purely going down to the bottom line. Then on the semi side as well, obviously we know that margins have surged on the back of rising prices. I don't think that these margins, is something sustainable. So on the semi side, I would expect that we will see margins rolling over the coming quarters, just because for the time being, I think really the tech space is pushing the limits. We don't really see the revenue yet coming through. The additional capex coming on top of what we already have. A lot of this is going into higher prices rather than higher volumes. The market is starting barking at it, say, it's kind of becoming more critical. We see the hyperscalers underperforming. So it's not really rewarding higher capex spending from here. And obviously, if there was some kind of adjustment, say, in terms of, let's say, the growth trajectory being flattened somewhat, I would think that memory prices will start coming off, and that will then clearly hit semi margins.
Yeah, and again, all stunningly sensible comments. But look, have your investors, your clients, have they got the appetite for playing the semis at the moment? When we see the kind of moves we're seeing in the sector, SK Hynix, Samsung, the Kospi, etc., and in the US as well, have they got the appetite for that volatility? I know that it's deterring a few people on this side of the world. I just wonder about broadly, are your investors keen on playing the sector still?
I mean, clearly there's a lot of interest, after seeing such a phenomenal rise in a specific pocket of the market. But must be said, we've removed our preference for the tech sector at the beginning of June, quite timely. It's been underperforming since. And exactly for that reason, because we said, look, it's not an expensive sector. Valuations look very reasonable. Kind of the most expensive part of the semi or the biggest names and the semis in the US trading below 10 times, which is, it doesn't feel extended. But if we look at prices, I think the valuation excess is basically in the price of the chips at the end of the day. Yeah? And there's a lot of this kind of mismatch of demand and supply obviously has led to a massive surge in chip prices. And if there was some adjustment, and I think there will be some adjustment given that the market doesn't like the, kind of capex growth extending or accelerating from where it is right now, this is where the valuation will likely adjust. And then, the valuations on the kind of price to earnings and so forth would suddenly probably look quite expensive and go up quite sharply, even if the stock is not moving up. So interest is definitely there, but we've kind of, let's say, neutralized our position on tech here.
Yeah, timely call in June. Well done, sir. Okay, that's it. Thank you very much indeed for joining us today. Wolf von der Rutberg, who is equity strategist at Safra Saracen Sustainable Asset Management. Try saying that quickly. Let us move on. Coming up on the show, as Andy Burnham is confirmed as the UK's next Prime Minister, we'll preview what to expect with Ritka's interview with the UK Trade Minister, plus the EU plans social media curbs for under 13s and restrictions for older age groups too. We'll hear from TikTok this hour and discuss how countries around the world are tackling the issue of sovereign AI with the President and CEO of NTT Data Inc. We'll be back. Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. Pretty sure after that ruling that he couldn't have tariffs under IEEPA, President Trump turned around and said, I'll remember which companies apply for the rebate. I'll remember which ones of you come back for that money.
It was a long list, though.
It was a long list. And every single CEO we spoke to in the weeks afterwards said, yeah, we were asking for it. They didn't want to say it always, but we got the answer out of them. They all applied for it. And it seems they are, by the way, because the US government has returned $81 billion in tariff refunds in the current fiscal year, stretching back to October 2025. President Trump's tariff strategy, a key plank of his economic policy, suffered a blow, didn't it, in February when the Supreme Court ruled that the White House had overstepped its authority in launching the levies. Well, the refunds pushed the US federal budget deficit for June to $120 billion versus a $27 billion surplus a year earlier. Well, Ritzker asked the UK Trade Minister Chris Bryant about the country's trade relationship with the US and whether he's frustrated at the lack of progress so far.
So we got the best steel and aluminium deal of any country in the world, so that's good. But of course, yes, we'd like to be able to take those tariffs down to zero. And we've introduced our own steel tariff measures in the last few weeks as well to try and make sure that we have a strong steel production sector in the UK. And we've been in negotiations with the United States of America and, for that matter, with the European Union about whether there's a means of getting all of our tariffs down to zero mutually. We got a good deal on automotives, best deal of any country in the world, up to just a 10% tariff up to the quota, and that's being exploited already. We got beef access into the United States of America for the first time, and large parts of the tech deal, although it is theoretically on hold between the two governments, actually in practice a lot of it is simply going ahead because our two sectors in AI and quantum and lots of other parts of tech are simply, they crack on and get on with getting what they need to do. So I would say that we've got to a good place with the United States of America, but of course we're still negotiating to get the final details on what would be a strong economic prosperity deal.
And if the US continues with protectionism, what should the UK do?
I'm not a protectionist. I'm a free and fair trade person. So free trade, obviously, I want to take down tariff barriers and other forms of barriers everywhere around the world because I think that's the best way of enabling trade and prosperity for everybody, including some of the poorest countries in the world, but also including the UK. But it also has to be fair. And that's why some of the issues around level playing field, where there's undeclared subsidy or there's exaggerated subsidy in some parts of the world, pricing out countries like ourselves, for instance, in steel, needs to be addressed. That's what the World Trade Organization is there for. I've always supported the idea of a rules-based order. I think that is in everybody's interest. And, we slowly encourage the United States of America to come back to that table.
I, for one, I'm disappointed that there's not going to be a vigorous debate about what the policies are of the incoming Prime Minister before he becomes Prime Minister. I would have hoped that Labour MPs would have kind of split the field a little bit. It's inevitable that Andy Burnham is going to become Prime Minister, but none of us actually know what his plan is, do we? And I think that's a shame, because the Makerfield MP and former Mayor of Greater Manchester, Andy Burnham, is now going to become the UK's next Prime Minister, but without a strenuous leadership debate. This is the point. He secured the backing of 349 Labour MPs. It's impossible now for anyone else to stand against him in the race to succeed Keir Starmer because of all those votes. Now, he's set to become the leader of the Labour Party on Friday before entering Downing Street on Monday. The incoming UK Prime Minister, this is the point. He's promised a lot of things. He's promised a broad church cabinet. He's promised more devolution. He's promised that he's going to tackle housing. I don't know. Please write into me. You all know my email address now. Has he promised to tell us how he's going to pay for it, or how we're going to pay for it, more to the point? I don't know he has. Anyway, he's promised a broad church cabinet that will reflect all wings of the Labour Party. Ritzka, though, also spoke to UK Trade Minister Chris Bryant about whether we can expect trade strategy to differ under Andy Burnham compared with Keir Starmer's approach.
I think we can do several things at the same time. So, of course, we're talking about reindustrialisation, but we have over the last couple of years. That's why we've put specific measures in, for instance, to protect British steel production, both trade measures and financial support measures, and, of course, the nationalisation of parts of steel production in the UK. I don't think an Andy Burnham government would be shying away from wanting to do more trade deals around the world. But the key one that we've got to get right, of course, is the European Union. It's more than 40% of our trade, something like 45% of our trade. We've seen over the last couple of years our trade in goods with the EU fall a bit, whereas with services it's grown quite substantially. Now, that means we probably need a better services trade deal with the European Union, and there's a whole series of things that I'd like to sort out about business mobility, about mutual recognition of professional standards. I'd like to see British artists being able to tour more easily across the whole of Europe, and of course we've still got to get the SPS deal on food and agriculture, all of that over the line. So I think Andy Burnham's it's an ineluctable logic, really, that you want to do as many trade deals as you possibly can with other countries to enable free trade, because that's how we grow the economy in the UK. And I'm very much hopeful that we'll be able to get a deal with Turkey done by the end of the year as well.
And of course, when you talk about EU, we know that Keir Starmer has been pushing to deepen ties with Europe, but he's stopped short of the customs union. Do you expect that to change under a Burnham leadership?
We made a manifesto commitment in the general election that we wouldn't go for a customs union or joining the single market, though I note that quite a few people said in the Brexit referendum that people who supported us leaving the European Union, that they still supported the idea of us staying in the single market. Look, I'm trying to achieve as frictionless trade as is possible with the European Union. Andy Burnham has committed himself to the Labour manifesto, so I don't think that that's going to change in the immediate future. But what do I think will happen in 5, 10, 15 years' time? I think our historic destiny is to be back in the European Union.
UK Chancellor Rachel Reeves will tonight warn that growth and investment in the country will only be possible if the government can, quote, maintain the credibility we've earned. OK. Reeves is expected to be replaced as Chancellor. We don't know that, though. We don't know that. We don't know that Chancellor Reeves is going to be replaced by the incoming Prime Minister. We haven't had a clue. And people have talked about Miliband, Shabana Mahmood. People have talked about all kinds of people. So we don't know what's going to happen. And that's part of the mystery.